The Ripple versus SEC lawsuit that's been dragging on now for 4.5 years is finally approaching what could be the end game. And the news coming out right now has XRP holders more excited than they've been in years. We're looking at June 16th as a critical deadline, and what happened on June 12th might have just changed everything for XRP's future. Ripple and the SEC just filed a joint motion that's basically them saying they want to settle this whole mess. And the terms they're proposing are way better for Ripple than anyone expected. If you've been waiting for regulatory clarity in crypto, this might be the moment that opens the floodgates for institutional money to finally start flowing into XRP. The joint motion that Ripple and the SEC filed on June 12th is requesting two major things that would completely transform XRP's situation. First, they want the court to lift the institutional sales injunction that's been preventing Ripple from selling XRP to institutions. And second, they're asking for $75 million to be returned to Ripple after the SEC payment. What this really means is that instead of Ripple paying the originally contested $125 million penalty, they'd pay $50 million and get $75 million back. That's not just a win for Ripple's balance sheet, it's a signal that the SEC is ready to settle on terms that are actually reasonable, rather than trying to crush the company with excessive penalties. Legal expert John Deaton, who's been following this case closely and actually represents XRP holders, estimates there's a 70% chance that Judge Annalisa Torres will approve this settlement. That's not just optimistic speculation. That's a legal professional who understands the case dynamics, giving you real odds on what could be the most important crypto regulatory decision in years. When you have a 70% chance of ending a lawsuit that's been hanging over XRP like a dark cloud since December 2020, that's the kind of catalyst that smart money starts positioning for before the official announcement. If Judge Torres grants this motion, both parties are expected to dismiss their appeals in the Second Circuit, which would essentially end this entire legal battle once and for all. No more uncertainty, no more wondering whether XRP is a security, no more institutional investors sitting on the sidelines waiting for regulatory clarity. The moment this settlement gets approved, Ripple can resume institutional sales of XRP, which means the massive demand from banks, payment processors, and other institutions that has been artificially suppressed for over 4 years could finally be unleashed on the market. To understand why this settlement news is so massive, you need to look at what this lawsuit has actually cost XRP holders over the past 4 years. When the SEC first filed this case in December 2020, XRP was trading around 60 cents and was the third largest cryptocurrency by market cap. Within days of the lawsuit announcement, XRP crashed to 20 cents and got delisted from major exchanges like Coinbase. That wasn't just a temporary dip. It was the beginning of a 4-year period where XRP was essentially treated as a legal pariah in the crypto space. During this same period, Bitcoin went from around $29,000 to over $100,000 at its peak. Ethereum went from around $700 to over $4,000. Solana, which didn't even exist when the XRP lawsuit started, became one of the top cryptocurrencies by market cap. Meanwhile, XRP holders watched their token trade sideways, not because the technology wasn't working or because adoption was declining, but purely because of regulatory uncertainty. That's 4 years of suppressed price action that could get unleashed very quickly once this settlement removes the legal overhang. Most XRP holders don't fully understand how big of a deal lifting the institutional sales injunction would be for the token's price. Right now, Ripple can't sell XRP directly to the institutions that actually want to use it for cross-border payments and other real-world applications. That's like having a highway with no on-ramps. You've got all this demand sitting there, but no way for it to actually access the market. The moment that injunction gets lifted, Ripple can start working directly with banks, payment companies, and other institutions to integrate XRP into their operations. The institutional market for cross-border payments alone is worth trillions of dollars annually, and XRP was specifically designed to capture a piece of that market by making international transfers faster and cheaper than traditional banking systems. But institutions haven't been able to fully adopt XRP because of the regulatory uncertainty created by this lawsuit. Once that uncertainty disappears, you're looking at potential demand from some of the largest financial institutions in the world, who need exactly what XRP offers: fast, cheap, reliable cross-border payment infrastructure. Before the lawsuit, Ripple was already working with over 300 financial institutions worldwide, including major banks like Santander, American Express, and Standard Chartered. These weren't just pilot programs or partnerships on paper, these were real business relationships where institutions were using XRP to move money across borders more efficiently than traditional correspondent banking. The lawsuit didn't kill these relationships, but it definitely slowed down expansion and prevented new institutions from joining the network while regulatory uncertainty persisted. While everyone's focused on the settlement, there's another catalyst brewing that could send XRP to levels that most people think are impossible. Crypto angel investor Dennis Liu recently pointed out that a Ripple IPO could trigger mainstream momentum for XRP, similar to what we saw with Circle's successful public offering. Circle's stock performance after going public shows there's serious institutional appetite for crypto-related equities, and a Ripple IPO would be the first time a major cryptocurrency is directly associated with a publicly traded company. Circle's valuation hit $25 billion post-IPO, which gives you some sense of how the market values profitable crypto companies with real business models. Ripple actually has better fundamentals than Circle in many ways. They have more enterprise customers, more real-world utility for their token, and a clearer path to massive scale in the cross-border payments market. If Circle can achieve a $25 billion valuation primarily as a stablecoin issuer, imagine what Ripple could be worth as the company that revolutionizes international money transfers for banks worldwide. Think about what that means for a second. Right now, any retailers who want XRP exposure are stuck buying the cryptocurrency directly, something most institutional players simply won't touch due to compliance headaches and regulatory concerns. But a Ripple IPO changes everything. Suddenly, pension funds, mutual funds, and other institutional investors can get indirect XRP exposure through plain old stock ownership. This creates an entirely new demand category that doesn't exist today, potentially sparking innovative crypto stock hybrid products that boost XRP's utility and make it accessible to mainstream investors. And that's where the long-term valuation picture gets really compelling, you know? Grok, the AI chatbot from xAI, recently provided some highly speculative but mathematically grounded projections for XRP prices if Ripple reaches valuations comparable to major tech companies. While these are obviously speculative, the math behind them shows just how much upside potential XRP could have if Ripple successfully captures even a small percentage of the global payments market. If Ripple achieved a valuation similar to Google, Apple, or Microsoft, which isn't impossible if they become the dominant infrastructure for global cross-border payments, the implications for XRP's price would be extraordinary. We're not talking about modest gains here. We're talking about the kind of price appreciation that would make early Bitcoin and Ethereum investors look conservative. The key difference is that unlike most crypto projects that are purely speculative, Ripple has a real business that generates real revenue from real customers who desperately need what they're offering. From a technical analysis perspective, XRP is trading in what's called a falling wedge pattern, which is typically a bullish setup that suggests an upward breakout is coming. The token is currently trading above key moving averages, and if the settlement news provides the catalyst for a breakout, technical analysts are targeting $3.12, which would represent about 40% upside from current levels. That might not sound like huge gains in crypto terms, but for a token with XRP's market cap, a 40% move represents tens of billions of dollars in value creation. What makes this technical setup even more compelling is that it's happening during a period of broader crypto market strength. XRP tends to be one of the biggest winners when these bullish waves hit, mainly because it has this massive retail army that goes absolutely wild whenever there's even a hint of regulatory clarity on the horizon. The 40% upside target to $3.12 is actually conservative compared to what XRP has done during previous bull runs. In 2017, XRP went from around 20 cents to over $3 in a matter of months. In 2021, it went from around 25 cents to over $1.50 before the broader market correction. Both of those runs happened while XRP was still under the cloud of regulatory uncertainty. Imagine what could happen if that uncertainty gets completely removed while the broader crypto market is in a bullish phase. The settlement news isn't just only bullish because the lawsuit is finally over. It's bullish because it wipes out the single biggest thing that's been killing institutional adoption for years. Just think about it. Every major bank or financial institution that's looked at using XRP for cross-border payments has had to sit there wondering, what if the SEC suddenly decides this is an unregistered security? That legal risk made XRP basically untouchable for most institutions, no matter how good the technology was. This regulatory cloud hanging over everything has been like an invisible price cap, keeping XRP from hitting its stride even when adoption was actually picking up steam. Once this settlement is approved, that ceiling disappears completely. Ripple can go back to signing partnerships with banks and payment companies without those institutions worrying about regulatory backlash. The company can restart their institutional sales program, which was actually generating significant revenue before the lawsuit began. But here's the real deal. This settlement sends a massive signal to the broader crypto market that the SEC is actually willing to cut reasonable deals instead of trying to burn crypto companies to the ground through endless court battles. This whole thing basically creates a playbook for how other crypto companies can hash things out with regulators without facing an existential deathmatch. Instead of living under constant threat from government agencies, crypto companies now have a clear path to reasonable settlements that let them actually build and grow their businesses. That's huge, not just for XRP, but for the entire space, because it finally starts lifting this regulatory sword of Damocles that's been hanging over everyone's heads for years. And what most people are completely missing is just how insanely massive the cross-border payments market actually is. Traditional correspondent banking, which is how most international money moves today, is absolutely brutal. We're talking 3 to 5 business days for a simple wire transfer, $25 to $50 in fees, and a whole chain of middleman banks all taking their cut along the way. Ripple's on-demand liquidity, using XRP as a bridge currency, can knock out the same transactions in literal seconds for pennies. That's not just a little better, it's a complete game changer that could save the global financial system hundreds of billions in fees and settlement costs every year. Banks using Ripple's tech can offer their customers lightning-fast, dirt-cheap international transfers while slashing their own operational costs and capital requirements. We're looking at a total addressable market of over $150 trillion annually in cross-border payments. And it just keeps growing as global trade and remittances explode. If Ripple grabs even 1 measly percent of that pie, you're talking about $1.5 trillion in annual transaction volume flowing through XRP. Even at tiny transaction fees, that represents massive demand for the token that would dwarf current trading volumes. Looking beyond the immediate settlement catalyst, Ripple's business model is built for long-term value creation in ways that most crypto projects simply aren't. They have real revenue from real customers who use XRP for real business purposes, not just speculation. Their on-demand liquidity product, which basically uses XRP as the backbone for cross-border payments, has been quietly growing this whole time, even with the lawsuit hanging over everything. And now that the regulatory uncertainty is finally lifting, that adoption should really start picking up steam. The cross-border payment space is absolutely enormous, and just keeps expanding thanks to booming global trade and everyone desperately needing faster, cheaper ways to move money internationally. Traditional correspondent banking is such a mess. Slow as molasses, expensive as hell, and ridiculously inefficient, which basically hands blockchain-based solutions like Ripple's a golden opportunity on a silver platter. As more institutions adopt XRP for payments, the token becomes more valuable, not just as a speculative asset, but as a utility token with real economic demand driving its price. What makes Ripple's long-term prospects even more compelling is that they're not just competing on technology. They're building network effects that get stronger over time. Every new bank or payment company that joins Ripple's network makes the network more valuable for existing participants because they can reach more destinations with the same infrastructure. This creates a flywheel effect where success breeds more success, and early adopters benefit from the network growing around them. Guys, you know that this isn't investment advice, but when you combine a 70% chance of favorable settlement, the lifting of institutional sales restrictions, potential IPO momentum, strong technical setup, massive addressable market, and a business model that generates real demand for the underlying token, you're looking at a convergence of catalysts that doesn't happen very often in crypto markets. So, if you like the video and you're generally interested in update videos around the tech niche, then leave a like and subscribe to the channel, and then we'll see us in the next video again.